from Kansas State University. This is Agriculture Today. Eric Atkinson with you. And today, an in-depth view of current international grain trade. We'll be talking with Guy Allen of the IGP Institute at K-State about where U.S. grain sales stand in that global market. He'll consider the new USDA World Grain Supply and Demand numbers, which were released last Friday, and couple those with his own observations on developments abroad as he talks about the outlook for U.S. sales of corn, soybeans, grain, sorghum, and wheat. Also today, K-State's Charlie Lee is back this week to report on a new study of bird aircraft collisions and whether birds congregating at nearby landfills might be a factor there. Plus more for you right here on Agriculture Today.
A social distancing tip.
While the CDC urges you to avoid close contact, like hugging or shaking hands, there are other non-physical ways to say hello. Wave, wink, use sign language, salute, smile, give the peace sign, throw up an air high five, do jazz hands. Remember, stay a minimum of 6 feet or 2 arms length away from others and stay home if you can. For more info, visit coronavirus.gov.
Let's all do our part because we're all #AloneTogether. Brought to you by the Ad Council.
You're listening to Agriculture Today. Glad to have you aboard with us once more. The USDA, as you know, this past Friday posted its latest World Agricultural Supply and Demand estimates for commodities, including the grains. This is a monthly barometer of what's going on with supply and demand and certainly international grain trade. We bring by once more for a comprehensive look back at those numbers and what they suggest to the markets now and the trade. Guy Allen, senior economist with the IGP Institute here at K-State. Guy, this was an interesting response to the reports, and we'll go commodity by commodity here in just a second, but prices reacted very strongly to the upside, and then yesterday backed off.
Yes. I think the bulls were sitting there at the trough waiting to be fed at 11 o'clock when the report came out, and they seemed to have got excited, and everybody put on their buying hats. We do have record open interest on the CME, number of the contracts across there. So the bulls definitely got fed on Friday. But as I went through the numbers here, there wasn't as much new information in here, I think, as a lot of people had anticipated. A lot of the stocks numbers had came out there on the 30th of September, which confirmed ending stocks, and they were all a bit tighter than expected and a little more demand than we had anticipated. So that has been in the market for a couple of trading weeks. And then I think a lot of the crop conditions and projections were also pretty much in the market. So I think the analysts went home over the weekend and thought about it a bit more and came back the first thing this week and reversed their views a bit. Everything sold off pretty hard.
But to note, these reports, these numbers do set a tone for what's going on in the trading circles that is very important to the markets day by day.
Yes, everybody trades the USDA numbers pretty much. You can have your own opinions, but the market pretty much trades the USDA numbers, although there's a couple numbers in here which I think we'll talk about as we go through, which I'll take a strong exception to, and I think the trade's kind of scratching their heads a bit as well on those.
We'll pick up on those. Let's begin with soybeans, and that's where the action has been and continues to be. What the USDA had to say about stocks and trade in that realm.
Yeah, the soybeans seemed to kick it off. They were took a runner right out of the box, and a lot of the world stocks, beginning stocks, were down about 2.25 million metric tons to 93.75 million metric tons. That was sort of confirmed on the September 30th stocks report that came out. So that was a bit of a known, but it did start the beans off with a pretty strong number. Imports to China were increased by about 1 million metric tons. They've hit that 100 million metric ton mark, a number we sort of expected to hit a couple years ago before African swine fever sort of eroded the demand base significantly. But this year, and I'm fairly optimistic that we should reach that number fairly easily, 100 million metric tons, which is a lot of soybeans. They've got their domestic crush also a little bit higher at 99 million metric tons. And that, I think, is quite reflective of the recovery in the pork production in China, because we're seeing that both in the soybean meal, their crush, as well as in the demand for corn on that. Another thing I was reminded this week was we're seeing significant growth in their poultry sector in China. Broiler production up 25%, layer production up 25% as well as across their other livestock sectors. And that's all demand for commercial feeding, which is definitely has access to those import markets. And that's really driving a number of things is that recovery. I continue to pick up a few stories of African swine fever reoccurring, particularly in their units where they're trying to repopulate. So I guess I'm not quite as optimistic on that recovery as some, but it definitely seems to be occurring.
Is China, Guy, the sole story in the soybean complex? It's front and center, that's for sure. It gets all the limelight.
Being that it's nearly two-thirds of the oilseed imports in the world, everybody stays focused on that primary market. However, the good news is we're seeing non-China imports up by about 3.3 million metric tons. So I think having a little hiccup there with China in the last 18 months with trade has actually forced the marketplace to one, consider other sources. And a number of customers have come back to the U.S. Rather than being cheapest buyers out of Brazil. They did buy U.S. commodity, and I think they got reacquainted with a quality product, and I think that's helped sell the value proposition. And they seem to have stuck with U.S. origin to a number of markets. So to see those non-China destinations for export remain strong and continue to grow is very definitely a good signal.
One does continue to wonder, though. The U.S. is still the lead supplier in the market until that South American crop comes to the forefront here. So we're in, to put it this way, the catbird seat until such time?
Yeah, from about September till March, it's U.S. Northern Hemisphere origin. That said, looking to have a very big crop in South America, although USDA trimmed it a bit. We're looking at about 92 million tons production out of South America this year, 7 from Argentina and about 85 out of Brazil. And Brazil will continue to be the biggest exporter of soybeans, but that's not necessarily a bad thing. They're starting to see a few challenges over there themselves. Brazil's fairly interesting in that their currency has seen a 34% devaluation in the last 6 to 7 months, which is making domestic prices just historically very, very high on that. And it's complicating things when you have that sort of hyperinflation and uncertainty with the currency situation. But it's impacting not only the grain and oilseeds, but also the beef markets, particularly as they export more and more of their livestock.
Well, China is still an active buyer in the corn complex as well, as we turn to that grain and the USDA numbers, what they had to say about that.
Yeah, the corn numbers were actually, I would say, a bit neutral. Ending stocks were lowered about 6.2 million metric tons globally, which, again, that sort of followed suit on the U.S. September 30 stocks report for U.S. numbers. Ending stocks expected to be about 300 million metric tons. Let's keep in mind of those ending stocks, 189 million metric tons of that will be in China, and I'll come back to that in a minute. On the production side, they did whittle back the U.S. production a bit on corn as they also did on soybeans. Also seeing changes in the Ukraine crop. They dropped it back 2 million tons to about 36.5. A number of trade analysts would suggest they think that number's a bit too high as well, as dry weather is sort of has impacted the finishing of that crop. Again, I come back to China imports. That was probably the biggest question in the corn numbers coming out. The USDA, again, left that China import number at 7 million metric tons, where the trade would suggest we have over 10 million metric tons of sales this season, just the first 45 days into the marketing year, and they're left scratching their heads. The USDA did put out a tweet after the report, suggesting that they needed to be consistent with their methodology and that they based their number on shipments rather than shipments and sales. But look, everybody in the trade would suggest that 7 million number is way too low. I'd actually suggest, and I've said before here, that I think China is going to be our biggest corn buyer this coming year of U.S. corn. You know, I've stated before I expect it to be over 20 million tons. I'd probably actually be so bold as to maybe put that number closer to 25 today. A number of people in the trade actually have that significantly higher. But again, that'll be a key number to watch. Again, it's going to be driven by the whole livestock situation in China, predominantly pork and poultry, as they continue to grow their meat sector. And
they have the needs, plus domestic supplies of corn in China are extraordinarily high priced. That's part of that scenario, too?
Yes. I was looking at some prices in China today, and we have about an $8.50 a bushel price equivalent in China, which comes back to the U.S. to about a $6 Chicago corn price. With China, we always have to remember that, look, it's a centrally controlled economy. It's state trading enterprises such as COFCO, which control that gate on that, on what comes in and at what price. It's not a free and open market. And how much they let in and at what value is always the question. But, look, if you had price transparency, it would suggest the China Chicago equivalent price of corn would be closer to $6 today than $4, which keeps me optimistic. And again, we come back to that China stocks number. As I think I've stated previously, the trade average is probably just under 100 million metric tons. I would suggest the market value has that probably closer to 50. Some people would suggest the import number could be between 20 to 45 million metric tons, which if it was that high, that's a big number. Look, there's plenty of corn around the world to satisfy that, but that would lend support not only to corn, but to grain sorghum, as well as to our hard red winter wheat as it's flirting with pricing itself into the feed rations domestically.
Well, that's a good segue into what we'll pick up after the break. And that is, Guy, what's happening on the wheat and grain sorghum export and sales fronts, and playing off the new USDA numbers there as well. Guy Allen is with us. He is the senior economist with the IGP Institute here at K-State. And we'll return with Guy after you hear this. This is Agriculture Today.
Did you know every Kansas farmer feeds 128-plus people?
Kansas farmers are hard workers, dependable, authentic, and sensitive.
Not only do farmers put food on your table, but they put clothes on your back and fuel in your car.
For more information about Kansas farmers, visit K-State Research and Extension online or stop by your local Extension office. This message has been brought to you by the K-State Animal Sciences Leadership Academy participants.
Agriculture Today continues. Once more, we've Mike's side, Guy Allen, senior economist at the IGP Institute here at Kansas State University. As we're looking at the latest USDA grain supply and demand numbers internationally from that WASDE report last Friday, and tying that into Guy's observations as well on what's going on in the trades for the respective grains. And we do want to pick back up, Guy, on grain sorghum. And this has been an enthusing market to watch of late, with movement again of that commodity into China. But what's your take on the USDA numbers on grain sorghum movement and, again, the market at hand?
Yeah, the sorghum and I guess the recovery in sorghum prices to where we were 3 years ago has been quite amazing. We have to remember sorghum is probably the most political commodity out there in a lot of ways. It's not as transparent as a market as some of the other commodities. But the USDA has our sorghum exports this year at 6.1 million metric tons, and look, we're well on the way of achieving that, I think. I'd suggest that number could probably be modestly higher. I guess I'm not quite as bullish on the sorghum export number as I am the corn export number, but they do work hand in hand. Unlike corn, which we were talking about previously, there's a bit more of the private trade engaged in that market. It is a substitute for corn. And when you look at the domestic market within China, the China feeders act very much like a U.S. cattle or chicken or livestock feeder or our Mexico customers who are very much feed-based, and they value that at 85 to 90% of corn value, and that's about where it's trading in China. And that's showing us some very, very good values here. We still have very good premium for sorghum above corn, both at the Texas Gulf and to some point domestically. But look, the market today for grain sorghum is export, and it's all moving to the Texas Gulf and Center Gulf as quickly as it can to meet those nearby shipments, and China continues to buy that. So we've really priced out the feed guys. They've substituted back into corn, both in the U.S. and in Mexico, and then that energy market as well has been priced out. So it's all going to be headed south this season, I believe. And
so, again, within China, though, corn versus grain sorghum in pricing, it's leaning back toward corn more in their perspective?
The price relationship domestically in China is still about 85 to 95% of the value of corn. Okay. I usually call it about 90%, rule of thumb, conservatively 85. And given the government control on the pricing of corn in China, that's what has lent itself to the strong sorghum prices, because of those price controls. And that's what happened 3-4 years ago when we saw those very high prices for sorghum. It was it was domestic policies that put the price of corn $10 a bushel in China, which meant anybody that, and particularly the private trade, that could import any other feed grain, whether it be sorghum or barley or DDGs or whatever, became quite attractive. And they're a bit off the radar because they're not a big volume commodity and they don't have quite the regulatory controls on them as corn or soybeans or wheat does. So I continue to remain optimistic that we're going to see that premium for sorghum in the market for the next 12 to 18 months. After we finish this harvest and we sit down and start giving some planning decisions for next year, it's going to be interesting, but I would definitely leave a spot for maybe increased grain sorghum acres coming up.
I want to come back to that in just a few moments. Wheat trade and the wheat market, if you look at that purely, it's been along for the ride in a certain extent, but it's doing fairly well on its own in terms of international sales, isn't it?
Yeah, wheat saw quite a bit of support 2 weeks ago, particularly on the back of the stocks report. That said, we're looking for record world production of wheat this year. The USDA increased it by about 2.6 million tons, so we're looking at 773 million metric tons of wheat produced internationally. Carryover stocks were increased by about the same 2.1 million tons, so a one-for-one move pretty much there. Ending stocks are up now to about 42.8% stocks-to-use ratio, which is quite comfortable. Again, a lot of those stocks sit in China, but wheat's a bit more diversified around the world in its production and who has the inventory. So we're quite comfortable on that. Our biggest competitor, the Black Sea, we like to watch Russia and the Ukraine. Russia's production was raised 5 million metric tons to 83 million metric tons. Interesting thing with Russia, they're still considering maintaining export quotas. I think they're real concerned about maintaining sufficient supplies for domestic consumption, and they don't want it running out of the gate too fast. By contrast, the USDA lowered the Ukrainian production by about 1.5 million tons to about 25.5, and exports came down by about 500,000 tons to 17.5. So we're still going to see quite strong competition in coming months out of that Black Sea area.
As we consider the wheat sales prospects for the U.S., though, now, one of the countries that's risen to the top or close to it, you say, is the Philippines.
Yeah, it's interesting. The Philippines has sort of stepped back into the market, particularly for U.S. wheat. One, I think they are a quality wheat buyer. They like their European-style breads, which means they like Kansas hard red winter wheat and are quite fond of that. I think another driver of that finds itself in the geopolitical situation. A few years ago, they were moving closer to China in an economic and political sense. I think events over the last 6 to 12 months has definitely changed their view as they've moved back closer to the U.S. for a number of reasons. And I think Philippines is one of those markets where government policy and bigger picture national security issues will drive a lot of their trade. So it was good to see the Philippines back in the market and buying U.S. grain again.
Then, Guy, looking broadly, the wheat trade outlook isn't as exciting as maybe corn or soybeans. Is that underplaying it too much? What?
No, not really. Look, the wheat balance sheet of all the three major commodities, it's quite comfortable. A year ago, we saw increased production in a lot of the marginal countries that would generally import a bit more. They've just been a bit absent from the market with their bigger production. And we see it with hard red winter wheat. It flirts with pricing itself into the feed grain ration, and it will tend to follow the price of corn. The interesting thing that I think is the continued premium we've seen in the soft red winter wheat market. It's continuing to maintain a good premium. I think supplies are, of the classes of wheat, it's probably the tightest. And there's a number of people that still like to utilize that, particularly domestically in the U.S., and it's got to compete with corn and soybeans. And right now, your winter wheats are trying to price itself appropriately against strong prices in both corn and soybeans. So at least they get it in the ground, so it's there next year.
Well, we'll finish on this, and you hinted at this earlier on in the conversation. As one looks at what's going on in our international grain sales currently, and particularly for those who are harvesting row crops, and looking ahead as we speak to what might be going into the ground this coming spring. Seed is being lined up as we speak, even as harvest continues. What are the international trade signals saying to producers about what to plant? You were rather bullish sorghum a second ago, weren't you?
Yeah, look, that's going to be right now wheat's having a hard look at that as it's trying to get put in the ground, as it's competing against strong corn and soybean prices. When we get to spring, people are watching those ratios between corn and soybeans as well. I think probably one of the most interesting dynamics is in the soybean market because, the highest price we see is for January futures, and the market's inverted there going forward. So there's no reason for anybody, whether you're a grower or a country elevator, to be storing soybeans. The market's going to penalize you pretty hard for doing that. And I think the key, particularly in this time of volatility, is you got to pay attention to your marketing. Use the alternatives out there. You can't do things this year like you should have did them last year. And there's a lot of money to be made or can be left on the table through appropriate marketing and risk management tools. And that applies whether I'm talking to a Kansas grower, an Illinois corn farmer, an Iowa soybean farmer, or an end user. And it's amazing. End users are pretty much the same all over the world, whether you're talking to a chicken producer in Mexico or China or wherever. They all have the same focus on that. So, improving those marketing skills is going to be key.
These are dynamic times in the markets and certainly revolving around what's going on in international grain trade, especially at this time of the year during harvest, where sometimes the prices tend to settle a little on the lower side. So good information, and we would remind folks that Guy puts together a full set of observations on international grain markets on the agmanager.info website. And you can check out his latest edition, which was posted this past Friday in the wake of the USDA's WASDE report. agmanager.info. Guy, thanks for coming over. Appreciate it as always.
Thank you much, Eric.
He's the senior economist with the IGP Institute at Kansas State University. That's Guy Allen. And we'll return after this break. This is Agriculture Today.
With the shortage of primary care physicians, especially in rural areas, health education and disease prevention are vital. K-State research and extension programs address quality of life, personal development, and health behaviors across all life stages of all social-economic groups. To learn more about health education, one of K-State Research and Extension's 5 grand challenges, visit www.ksre.ksu.edu.
Broadcasting from the campus of Kansas State University since 1924. This is the K-State Radio Network, and you're listening to Agriculture Today. Eric Atkinson with you. Now today's agricultural news headlines, these courtesy in part of DTN. The USDA's Farm Service Agency says that October the 30th is now the deadline for producers to submit applications for the Wildfire and Hurricane Indemnity Program Plus for 2018 and 2019 losses. The USDA didn't originally specify a deadline when the program was announced. The FSA will launch a new tool on the farmers.gov WIP Plus webpage to explain to producers the eligibility for the program and whether they had possible losses in 2018 and 2019. The tool will also allow producers an opportunity to provide information for FSA staff to reach out to them. Now, the agency will announce soon the details for producers who experienced quality loss from 18 and 19 natural disaster events as authorized in the appropriations legislation. There will be a separate sign-up period for producers reporting such quality loss. And the FSA has received more than 133,000 applications for WIP Plus disaster assistance and has paid out nearly $1.4 billion in WIP Plus benefits. Crop loss estimates from that derecho windstorm that slammed Iowa in August have increased by more than 50%, according to a new report. The USDA said on Friday that the number of crop acres that Iowa farmers are unable to harvest has grown to 850,000. That's up from estimates last month that 550,000 acres had been lost. The storm generated winds of up to 140 miles per hour, flattening crops, and damage then compounded in late summer with the drought that at its peak encompassed much of the state of Iowa. That drought is again expanding after some September rainfall there. Iowa Agriculture Secretary Mike Negg said he expects the number of lost acres will climb even more as growers move deeper into harvest. Usually producers will try to harvest the downed corn, salvaging what they can first, but Negg said he has heard that many are asking crop insurance adjusters now to take another look at their fields after finding it more difficult than expected. The average corn yields in Iowa will drop to 186 bushels per acre, according to the latest USDA estimate. That's down from forecasts of 202 bushels per acre back in August. Brazilian crop agency CONAB has forecast record soybean and corn harvests for the 2021 growing season there as farmers are boosting their productivity. Brazilian farmers will produce 133 million metric tons of beans in the 2021 season, for which planting recently began. According to that agency, this is its first forecast for the season, by the way. Brazil produced 124 million tons of soybeans in 1920. Its productivity forecast to increase by 4% from 19 and 20. Brazil overtook the U.S. in 1920 to become the world's largest soybean producer. Brazil will outdistance the U.S. again in 2021, according to USDA numbers. The total Brazilian corn crop will reach a record 105 million metric tons in 2021, according to CONAB. In 1920, Brazilian farmers grew 102.5 million tons of corn. Productivity will increase 2.8% over 19 and 20, according to CONAB. You're listening to Agriculture Today. Now it's on to the weekly feature for you dairy producers, Milk Lines, with K-State dairy specialist Mike Brook. Mike?
Today I'd like to visit with our Kansas dairy farmers and, well, just the general population in terms of what's happening in fluid milk sales around the United States. Fluid milk sales have been tracked very carefully since about 1975 here in the U.S. And one of the things that we realize is that as we look at the total volume of milk that goes into fluid milk products, that was really stable through the first 25 years or so of the tracking of the data. However, once we started moving into 2009 and later years, we've seen a substantial drop in the total amount of milk that goes into milk products, particularly the fluid milk side of this. So as we look at those trends, there's some things that I think the dairy industry needs to take into consideration. As we move less milk into fluid milk sales, that means that our production has to move into other types of products, such as cheeses and possibly exports in terms of a dry product. However, is there anything that we can do to recover the amount of milk that's going into fluid milk? Because that is an important part of our total milk volume, and it's also an important part of the volume that's consumed very quickly as you think about the time it takes from the time we take the milk from the cow until it's actually sitting on the grocery shelf. In some cases, that might even be less than 24 hours. So it is a very quick turnaround from the farm to the table. So what are some trends that we see in the information that is before us? Well, one of the bright spots in this whole thing is really what's happened with whole milk sales. Whole milk sales have actually been gaining in strength throughout the last few years. However, at the same time, we've seen a decrease in the amount of lower fat milk sales. When we look at flavored milk, it's kind of interesting. The real increase here is the whole milk sales that are flavored. When you look at other flavored milk sales, those that would have reduced fat, those are actually decreasing. So what does that tell us about our consumers? It says that our consumers are actually changing maybe the things that they pick up off the grocery shelf. They're willing to choose a whole milk, flavored milk choice more readily than what they are lower fat flavored milk. So when you think about that, that probably means that when they look at total volume of milk that they consume, both whole milk and of lower fat milks, it's probably actually less. They will choose a product that has a better mouthfeel, maybe has a better taste, and over something that's lower in fat, maybe that they could drink a larger volume of and still consume about the same amount of fat, but it just doesn't have the same mouthfeel. So as we think about the American consumers and we think about the things that they might desire, we may have to look at products that contain more milk fat, whether it be whole milk or whether it be other products that we might put on the grocery shelf. Maybe that's our opportunity in the future. This is Mike Brook with K-State Research and Extension, encouraging our dairy farmers to think about how their milk will be used once it hits the grocery shelf and which products we maybe should emphasize in terms of research and milk sales.
Many thanks, Mike, as always, and we'll be back in a moment. This is Agriculture Today.
Social distancing slows the spread of coronavirus, so if you have a fever, dry cough, and shortness of breath, call your healthcare provider before going in. More info at coronavirus.gov. Let's all do our part, because we're all #AloneTogether. Brought to you by the Ad Council.
Up for you now on this Agriculture Today, our weekly stint on wildlife management with Charlie Lee aboard, wildlife specialist, K-State Research and Extension. Charlie, a unique study you'll look at today. It's addressing a question about bird activity around landfills and how that might contribute to bird-aircraft collisions. That's a rather intriguing question.
Well, when you start to look at the information that's out there, we know that animals have benefited from disposable food waste probably since prehistoric times. And solid waste landfills, municipal solid waste landfills, certainly are becoming less common, but are certainly attract many different species of wildlife, both mammals and birds. Oftentimes, the community's approach is to use just as a transfer station and haul waste further distant to these large municipal solid waste facilities. And then there's the other type, construction and demolition landfills that don't seem to have as large of an impact on wildlife movement because of the lack of food resources that are found in those locations. We know that the placement and location of those landfills has been presumed to have an impact on wildlife use. In fact, the FAA, or Federal Aviation Administration, consider that landfills that are within either 5 miles or 12 miles from the landfills, they would be considered a hazard and would like those landfills moved or not allow airports to get proper certification if something isn't done to mitigate those risks. The data shows that 93% of all reported bird strikes occur below about 1,000 meters, which is based on the typical approach and departure angles of aircraft. So most of them are happening low to the ground. The species that are involved are those that are also fairly common. Gulls, there are a couple of species of gulls that are responsible for the majority of the strikes that lead to aircraft damage. Then number 2 would be Canada geese, again very common and becoming increasingly more common around suburban and urban areas. Rock doves or pigeons would be number 3. Then turkey vultures, and looking at mallard ducks and European starlings to kind of round out the top 6 species involved. Most of those birds are going to be fairly low to the ground and can create substantial problems.
These bird strikes are then quite frequent in these areas, so this is the core of the problem then.
Well, in this particular study, which was done by USDA Wildlife Services researchers, they found 685 adverse impact bird strikes were reported within that 5-mile range between 2009 and 2017. So there's certainly a lot of bird strikes there to be reported. Some reports are only voluntary, but they think they have a pretty good handle on getting reported strikes in a large database. And despite those warnings against citing these new municipal waste facilities and construction and demolition facilities within that either 5 to 12 mile extents of an airport, their analysis of this bird strike data found little evidence that supports an association between the adverse effect bird strikes and the presence of these municipal waste facilities.
So what does that say about this presumption that placing those landfills further away from an airport or other frequently trafficked area would be an answer to this? Zoning, for instance, doesn't seem to carry much weight here.
Well, I think the most important thing to come out of it is that they probably need more localized data. Birds are almost ephemeral and very localized in nature, and perhaps the data that is being collected needs to be done a little bit differently in order to be analyzed. We need more detailed data on bird abundance and movements around airports and landfills, especially in that three-dimensional area, both how high they're going to fly and how large of an extent of an area they're going to occupy when they find suitable habitat. So I think until we get a little better data, we're basically going on an assumption that these municipal waste facilities are a considerable hazard. And I'm sure people that have spent any time around those, seeing what many would consider an abnormal number of birds, and when you have an abnormal number of birds in a general location and aircraft flying through that location, the possibility or probability of aircraft strikes is certainly higher. And
discouraging birds like gulls, like geese from congregating around landfills, that's going to be a tall order then.
Yeah, we've got to look at it in a little broader picture and not just single out the municipal waste facilities, because there's a lot of habitat conditions that can be formed with varying landscape diversity out there. We need to look at crop fields. We need to look at rangeland. We need to look at what types of crops are planted in those areas as well. Also, keep in mind that it's going to be very, very difficult to eliminate strikes, but perhaps we can get them down to a much more manageable level.
Once more, drawing here from a new study out of the USDA's Animal and Plant Health Inspection Service and its Wildlife Services Division in particular. It looked at the placement of landfills in proximity to airports and other heavily trafficked airways and trying to work up some information on how the relation of those two affects bird strikes by aircraft. And Charlie, we appreciate you going over this with us today. Many thanks. Wildlife Specialist, K-State Research and Extension, Charlie Lee there. Well, that's today's edition. We'll be right back here tomorrow, this same time. Do rejoin us then, won't you? And remember, if you haven't yet, look into our podcast service. We package up each day's broadcast for automatic delivery to your mobile device via your podcast platform of choice. You can learn more about that at agtoday.net, or you can listen each day directly from that same site, agtoday.net. Please do take advantage of that. And with that, Eric Atkinson here, bidding you a good day for Agriculture Today over this, the K-State Radio Network.